Hey everyone, before I start today's video, I just want to clarify that this video was recorded on June 7th, 2022, but I am going to be posting it for today, June 9th, 2022. So I hope you guys enjoy today's short video and I hope it further helps the strategy that you trade. Hey, good afternoon. Today is June 7th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We've got a 21 EMA here in blue, 9 EMA here in cyan, 200 EMA here in magenta, and we've got a MACD indicator down here at the bottom. But we primarily focus on using technical analysis, price action, and overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content, and let's get right into it for today. As we normally do on this channel, marking level of resistance up here at overnight highs, level of support down here at overnight lows. Now today, again, is not going to be a long video. I'm actually going to just show you the chart that I have for today. I finished trading very early. As soon as I started to see prices chop along here, ATR is currently at 2.9, but it was dipping down pretty low. Not a lot of market movement. I wasn't interested in taking any more trades here. But anyway, yep, let's go ahead and focus on reading through this chart a little bit. Pre-market hours, you have prices that are moving down, kind of oscillating up and down below the EMA as prices push down lower. Kind of hard to find a bigger trend here. You could draw this trend in different ways, but realistically, we are in a downtrend where our bias is short. Prices briefly push above the EMA. We get this new high with a first entry long, second entry long that reverses and fails. Nice close below EMA. You could look at taking that for at least a scalp before prices push back above the EMA. Now, this is an area of the chart that I wanted to talk about, and I'm going to just go ahead and fast forward a little bit to show exactly what's happening. So with the catching stop strategy, as the 9 EMA, 21 EMA begin to separate, we have a new low down here as prices come up. First entry short, prices come up. Second entry short triggers. People will put their entry order one tick above the signal bar. They'll wait for prices to come back up. They'll get into this trade. And I believe this only moves about 6 ticks, 6, 7 ticks. It moves 7 ticks before reversing. So if you're going for 2 points or 8 ticks, you're going to get stopped out here. And some people are going to say, yeah, but I follow the rules. Prices are holding above 9 EMA. MACD is showing bullish momentum. I agree with you. This follows the rules. Prices tried pushing down to continue this downtrend. Couldn't happen. We're making higher highs now. Prices pushing above EMA, looking to make it to the opposite end of the trading range. I don't necessarily think this is a bad trade. The issue is the market has been very choppy lately. There are these moments where we get overlapping bars and prices are not moving a lot. And I really think that's just because we're in the summer months and the market naturally slows down around this time. And the market works in seasons. And as the seasons change, we have to be able to adapt to the conditions, adapt to the market. So the point of me marking this trade here is right after this second entry short triggers, there are these overlapping bars that start to form. Now, some people could argue, okay, this is momentum that's being generated to make that push up for a scalp. The other way to see it though is as prices continue to chop along, this momentum buildup of trying to catch stops actually dies out because as time goes on, more people get out of the market, whether they scratch their trades or whether they make their price targets. So as soon as we start to see these overlapping of bars, even if prices don't close below 9 EMA, there comes a point where we need to take our orders out of the market so we stay out of these trades. So something that I want to implement here is if we get 3 overlapping bars right after the signal bar, we have to remove our order. Another time we see this, if I fast forward a little bit, is right here. So let's see what's happening here. You can see prices, we have a bit of a bullish imbalance as prices are chopping upwards. Some people may argue we have some sort of channel at play, but when prices are kind of stacked like this, EMA is still relatively flat. I don't really like drawing trend lines that small. I'd argue we just have a trading range with a slight bullish imbalance here. So prices shoot up and out of this trading range that we have. Prices form this plateau before pushing back down. First entry long, then prices push down below EMA. Second entry long triggers. 9 EMA is about to cross over 21 EMA. MACD is showing a crossover into bearish momentum. As soon as you get this second entry long trigger, you're putting your order one tick below the signal bar right here. If you hold on here, prices would have gotten you into this trade before coming back and stopping you out. Now, what keeps you out of these nasty trades is this 3-bar overlap rule. So you have a signal bar, 3 overlapping bars. With this congestion in play, you have to cancel that order. You don't want to take that trade. Now, again, I don't want to cherry pick here, so let's find another. I think I saw another opportunity later on. So right over here, we have this nice separation between the 9 and 21 EMA as prices are working up. We're resetting the count right here, where prices consolidate for a little bit. They meet at the 9 EMA and then push up. So we restart the count, prices come up and down for a first entry short, prices come up, looking for a second entry short to trigger. Second entry short triggers. Your entry order is going one tick above this signal bar right here. And as prices chop along here, we don't get a close below the 9 EMA. So technically our orders are still in. And depending on your bar that you have here, you might have a close at or below the EMA. But even if this bar was a little bit higher, as prices come through, if you're trying to catch stops and you're following the rules, it could potentially work here. But again, look at the overlapping bars that we have. We have a signal bar 1, 2, 3, 4, 5, nearly 5 overlapping bars. After this third overlapping bar, if you're still not into this trade, remove the order. I really feel like this rule is going to apply significantly well in days where we have trading ranges like this. It's going to keep you out of these nasty trades where everything seems to align in your favor, but then you get stopped out. Now with this trade here, I didn't have this range necessarily drawn like this. I had it more like, let me slide this back. I had something more like this. So this is what I was looking at. We form a double top here from these prices here. So this is resetting the count 0. Prices come down and up for a first entry long. Prices come down up for a second entry long. That triggers. MACD is showing a crossover into more bearish momentum. 9 EMA is crossing over 21 EMA. But I marked it as aggressive because we're trading into the support level of this trading range. You can see the 9 EMA, 21 EMA relatively flat. Prices are oscillating up and down above, below 21 EMA. So that was an aggressive one I didn't want to take. But with this 3-bar overlap, we have 1 bar, 2 bars overlapping. If this third bar does not get us into this trade, we need to remove our order. But prices do come down, get us into this trade before pushing down for at least a scalp. So again, I marked it aggressive. I didn't like trading directly into the level of support down here, but that's another trade that you could have potentially taken. I don't know if there's any other trades I wanted to talk about. I didn't see exactly what prices were doing here, but again, ATR is very low. It's at 2.8 right now. You get these slow chops down, and I just don't like trading any of that. So unfortunately, another relatively slow day. I finished with a loss at this trade here, but it's very similar to this one here. If we get those 3-bar overlaps, let's just stay out of those trades. I really think it's going to save us a lot of heartache. But anyway, that's going to be the short video for today. I appreciate everyone that's been watching. Leave a comment. Let me know what you think about this 3-bar overlap rule. Are you going to implement it into your trading? What other rules have you kind of established for yourself in order to filter out bad trades and keep you on the right side of the market? Let me know down below. That's going to be it for today's video. I'll see you next time.